Oh my god, it seems floor just shifted underneath Facebook stock this week as it went down over 20% overnight, which for a company this size is a huge deal. So let's explore what is going on, latest news about imploding Facebook stock, possible reasons behind it, and my perspective if this is the right time to buy, sell, or wait. Hi, my name is Sunny, and I make content that affect a common man financially. So let's dive into today's topic, imploding Facebook stock. If you are new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which will be highly appreciated. Just imagine the scale of it. In a very rare event, stock price of Facebook's parent company Meta wiped about $230 billion in shareholder wealth, and that too in one of the biggest single day loss in history for any US company. It plunged over 25% on Thursday, eroding $30 billion in Mark Zuckerberg's personal wealth, which for the company the size of Facebook is a matter of concern. You can say the price swing in the stock is just like what we are used to seeing in small cap stocks. Mind you, this is a $1 trillion company we are talking about. Since they went public over 10 years ago, they have touched new milestones every year, but now it seems some sort of brakes have been applied on their seemingly unfettered rise. We all remember the golden days of social media a couple of years ago when they came up with a different business model by providing services while monetizing for the targeted ad. People must be wondering what happened overnight that it lost almost quarter of its market cap. I would say this has not happened overnight, rather it is a culmination of events leading up to Thursday when they announced their financial results. In my opinion, there are three distinct reasons behind it. Number one, there is so much saturation in the social media space, thus, ad rates have gone through the roof. Now, on top of this, increasing inflation along with stoppage of stimulus by the Fed resulted in what seems like a slowdown in people spending. So, naturally, the ad revenue has gone down, which has been the biggest money spinner for Facebook. Therefore, it missed expected earnings per share. Number two, the second most important event happened last year when Apple changed their privacy policy as it empowered its users on its ecosystem by giving them options to opt out of online tracking. As a business model, social media companies make money when they track people's online habits across platforms and devices, which they monetize later on by selling targeted ads to the advertisers. Therefore, this change in policy from Apple threw spanner in their business model in my limited wisdom, as it will reduce the effectiveness of data tracking across platforms and devices, especially in the Apple ecosystem. As a result of that, targeted ads, which were the bedrock of Facebook's immense profitability, took a huge toll last quarter. Number three, and finally, there is a shift in people's online preferences toward video content, which we all know has been spearheaded by YouTube as well as TikTok. Remember the golden rule: ad spend follows the eyeball, so there is a clear shift of ads towards more video based platforms. Facebook has seen for the first time decline in its financials along with little bit grey prospects for the future. Frankly, I don't see any change coming in Apple's privacy policy going back to where it was earlier. So the $1 million question is it the time to buy the dip in Facebook? As a matter of fact, we pay premium to buy stocks like Facebook because there seems to be a moat in their business model. With what I have elaborated earlier, it appears the same moat seems to be eroding a little bit. Last year, they have come up with a new focus toward metaverse, which could be a new big thing on the horizon, as was clearly evident when Facebook changed their name to Meta. In today's fast moving world, technology is moving at even more rapid pace, and there are new evolving converging technologies coming up. Definitely, there is no way social media should be written off, but there is a change in people's preference, so they will evolve into something very different. The only way they can keep their moat intact is by evolving and picking the trends very early on, where metaverse could be one of them. But right now, it seems their business model needs to be revamped as the possible reasons behind stocks implosion are not going anywhere. Therefore, I would wait till I could see some clarity. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.